Yeah. So anyways, man, I'm all yours. Let's do.
Okay, well, I kind of sent you some background info, but just to recap some of that, we're just supposed to write a paper about our interview, how, you know, what our next steps in career in CRE and how that's going to be impacted. Look,
Uh-huh.
I'm a tax partner, so I don't really plan on going anywhere. I plan on
Yeah.
being a tax partner for as long as the tax code's around. So,
Well, you can't
um,
officially say you're leaving. I mean, this is being recorded.
right, exactly. I've always, like to keep my backup options open, but I'm always trying to, make sure my resume is continuing to build and continue to grow, and you never know where that takes you. But
Hey man,
for
don't
now, I'm
worry. You will
happy.
never be out of a job with taxes. Though. You have no
Yeah,
idea how amazingly boring they are, and nobody wants that job.
right.
So that is job security built in.
It is. We used to call the Tax Cut and Jobs Act, which was the Trump tax cuts. We used to call it the Accountants Full Employment Act because tax was always going to be hiring after that. Um, and so let me just ask you this, what type of CPA services do you use, and Boardwalk use?
Yeah. So look, on the corporate level, basically, we use CPA firms, or a firm rather, for specific real estate based taxation. So this is all accelerated depreciation, making sure all the journal entries are adjusted and added to our balance sheet, profit and loss, cash flow statement for the entire year. All the numbers are reflected. We have our in-house controller, but it's always best to get a second opinion once we do all of our work. And
Yep.
then basically have the K1s. Anytime we're buying or selling, mostly buying, get advice to see, okay, well, you see personally on here's all the tax loss pools I have. Here's what I can potentially sell it for. What am I on the hook for, if at all? And then also with regards to when we're selling for investors, we have them do a third-party audit to make sure all the returns are being calculated correctly and all the funds are being done properly and all of that sort of stuff. So apart from the base level stuff, as the business is growing, I mean, on a personal level, we'll start getting more tax strategy sort of advice. But to be very frank with you, in our business, there's so many write-offs that, as my CPA Mike keeps telling me, dude, how should I plan taxes for you? You don't pay any taxes, right? I can't plan when you don't pay. I was like, okay, well, that's a good point. Because every 6 months I have this brilliant idea that we should do this and we should do that. And he's like, dude, you have so many write-offs. You got to burn through them first.
Right.
Then, once we're like 50% of the way there, then you can think about it.
Yeah, I think that's fairly typical of my real estate investors as well. At least if we're doing it right, that's what uh, we're planning around or strategizing around as well.
But again,
So,
our loss pools typically every year, because we do a few deals and developments every year. Can you hear me?
yep.
Yeah, so we do a few developments, we do a few acquisitions every year. That so far, at least, that pool has grown. Now, maybe we double or triple or quadruple in size, hopefully soon,
Right.
and we sell all of those deals in one go. And maybe there's that effect. But typically, when we're selling, we're also buying in a very short period of time, right?
Right.
So yeah, you depleted here, but you added back up here again, right?
Right.
So again, we haven't really reached the level of where we're depleting all those resources and fancier stuff isn't there right now.
Okay. Got you. Um, and so, you said you use one CPA firm or multiple?
I just use one because I like to centralize all my business in one area with all my vendors, basically. And I like to have deeper relationships with a small group of people than, kind of sort of relationships with like a million people.
Right. And so that firm, they handle your syndicate and your personal and maybe some related things that are part of that group, the Boardwalk does.
Yeah. If I need tax strategy advice or I need a specific structure to be built, then my lawyer and my CPA firm could work together, basically. So the counsel and the CPA work together if there is something specific. But to be honest, look, we all play in a little sandbox, right? Everybody's got a
Right.
niche. So once you kind of have your ducks in a row, I mean, man, maybe once a year things change, but they don't really change.
Okay.
It's a very well established vertical, basically.
Right. Yep. And so how did you choose that family, choose that CPA? Was that family relationship or was it
Now, one
you
of my
interviewed a
partners,
few?
actually, they're a local firm. I knew about them because a lot of the other private equity guys were using them. When I was moving back to Dallas, one of my partners who lives in Dallas introduced me to them, but I just knew of those people before, and I knew they were doing a good job. And then, it's actually good to have an intelligent conversation with people who don't want to use overly buzzwords, right?
Right.
But I think it's a personality match, right? A lot of times.
So you already touched on the next one, but and I'm typing notes, so don't think
Yeah,
I'm emailing or something like that,
sure.
please. But yeah, um, it's relationship versus technical. You started maybe more relationship wise, but realized
No,
that
no,
technical
no.
skills.
Technical competency is the base score, man. Look, if somebody's stupid, no amount of relationship is going to save them,
Right.
right? Similarly
Yep.
for me, right? I mean, in the context of a professional relationship, I cannot expect to not give them any business. And like, if I don't give them any business, but I call them all the time, I can't expect them to pick up my phone, right?
Right.
In the context of a profession. So the professional competence is understood. It has to exist, right? But then obviously, where you take the relationship to the next level, where you keep coming back, is then it's the personal relationship. Because if people don't have their ducks in a row, yeah, man, no amount of personality is going to overcome that, basically.
Right. Yeah, no doubt about that. I think that's very typical. I think when you're searching, you have to have that technical expertise. And then after that, you keep coming back for relationship purposes.
Yeah, then so you like somebody, you vibe with them, they've got a good personality, it's easygoing, you can break bread with them. All of those things then enhance the relationship. But the foundation is still technical expertise.
Right, exactly. I'm gonna skip the next one. I think it's something I'll come back to. Is there anything your CPA is not doing that you would like them to do?
Yeah, give me work for free. They don't ever do that. I've always bitched about that. But look, I think my point is, I don't know, because a lot of times if I don't know something, then it's hard for me to know if they're doing it or not, right?
Right.
So if somebody tells me something and then I find out, I request it and I ask and I get a wishy-washy answer, well, that's a different thing. But so far it hasn't happened. But sure, man, if you tell me a cool trick, I'm game, man.
Well, I was just wondering if there's, would you like to meet with them quarterly, or do they really only do compliance? Would you like their assistance in future planning? I mean, you mentioned you don't pay much taxes, so it may not be important to you.
No, hold on, man. My tax return is over 100 pages or 200 pages long.
Mm-hmm.
It's not like I don't pay taxes. They're all deferred because I've lost this to offset against income.
Right.
So it's a deferral mechanism. But to get to that stage, a lot of work has to be done.
Mm-hmm.
Like, I can't just write a letter to the IRS saying, well, I got a lot of losses this year. Figure it out, right? So a lot of work has to go into not just me. I mean, whatever. I mean, lots of guys are bigger than me, right? A lot of work has to go into proving all of that's happened.
Right.
But look, as a client, you also need to know what's going on. If as a client, your CPA comes back with something outrageous, which doesn't pass a smell test, well, then you also have to push back, basically.
Right. You ever had a CPA make a mistake or cause an issue for your business?
In what regard, basically?
An example would be just K1 that was presented to an investor incorrectly.
Well, so far, we don't know. Nobody's complained so far. So if something's happened, we don't know about it. Neither do our counterparties have expressed any thing saying that, oh, this doesn't work. But look, mistakes might happen, but so far nobody has pointed it out and we don't know.
Right. Anything about state or federal, that's the federal focus, anything on the state level that's caused you pain or problem?
When I lived in Oklahoma, which was last year, 3 long years of my life, right? Yeah, I had to pay a little bit of taxes, but whatever, stuff happens. I mean, Texas is a no state income tax, so it's a lot cleaner to do it here. But the government makes their money on property taxes and all other indirect taxes. There's no free lunch, as you know, in life.
That's right. So on your syndicate, do you have any issues or challenges in just maintaining all of those partners and their information and delivering K1s and all that? Or is it, a smooth process for you?
Oh, to be honest with you, look, I wouldn't say it's smooth, because every year, like, at the start of the year, it's a mad rush by my controller and my team to get everything done and deliver to our CPAs on time. Because if we don't deliver on time, then they can't deliver everything to us on time.
Yeah.
Right. But look, it's a what is it? It is the nature of the yearly work cycle, right? Some things are front-ended. Look, some things are back-ended, and some things are consistent across the year. So we have our own in-house controller, staff accountant. So she is very, very blessed for her. She does a lot of the work. So by the time it gets to our CPAs, a lot of the base level work is done. But again, do things happen? They happen, but oftentimes it's not because of one, say, person. It's oftentimes a series of events that you knew was going to happen. Right. You just chose to ignore it, right? You're like, dude, I got a lot of stuff going on.
Right. Yeah. Usually those problems are self-inflicted.
Yeah.
Okay. I want to talk a little bit more about tax stuff, but I'll get into one, basic question. What's your common structure? I would assume it's an LLC.
No, it's an LP. The reason is we have a lot of Canadian investors. So for tax purposes, it's a flow-through vehicle, is what I've been told. So for us, it doesn't matter, but for them, it helps them avoid double taxation.
Okay.
Don't ask me why the CRA, in their wisdom, consider LPs to be fine and LLC to not be kosher. But, you can't argue with the government, man.
Got you. Well, there's interesting things about that and how debt gets allocated with LPs versus LLCs.
There must be technical stuff, but again, what we're doing is nothing overly complex. There's not the capital stack is pretty simple, right? It's senior debt, common equity, right?
Yeah.
So for us, the stack is simple. So that's why so far, at least, it hasn't been an issue or hasn't been a material enough issue, basically.
Right. You do any kind of carried interest and things like that for yourself?
Yep, dude. Yeah, dude. All of us. All we live for is carried interest.
Right.
Yeah, that's how we all make our money, basically. Like the bulk of our wealth is generated from carried interest.
Right. And that's typical in private equity. It's typical in really any fund type arrangement. You get people a good return. And
ours is all a private equity concern, right? So, or rather a structure. So that's why the structure is, again, very simple. GPLP structure, nothing fancy about it.
Mm-hmm.
If you've seen one, you've seen all of them, basically.
Right. So I listed a few tax strategies. These are all things that I'm aware of or my firm touches in some form or fashion. If you know any others, feel free to add to this list. But just want to know, do you use cost segregation? Sounds like you do. Yes. And then do you get a study performed by an outside party or your CPA?
Yeah, it's through a cost segregation person. We know, I'm sure they had a CPA, but it's such a commodified business, again, that you can get these for like $6,000-7,000, man, at most.
Yeah, very cheap. And
and that's where we have to argue with basically the cost segregation person, how much is allocation to land, how much is not allocation to land, which bucket you put it in. But again, none of that is like supremely technical stuff.
Right. Yeah.
Yeah.
And it's really all done by software these days.
Yeah.
What about Section 179D?
What is that? Hold on, let me look it up. Section 179D.
It doesn't apply to residential as much. It's more of a commercial deduction.
Yeah, then we don't really do it because we're all residential.
I think once you reach a certain story, you're able to pull in some 179D. But it's effectively determining, do you meet energy efficiency standards? If you do, you can actually take a $5 per square foot cost deduction.
Yeah, for us, I don't think it applies. That's why.
Yeah. Its residential sister is called Section 45L, which I listed a little bit lower below. Section 45L is a tax credit per unit. Do you pursue those?
45L. Why don't you email me after this? I'd love to know more about this. What does that do?
It's a $2,000. It used to be a $2,000 per unit, per living dwelling unit tax credit. If you meet energy efficiency standards, they changed it. I think it's up to $5,000 per dwelling unit.
Oh, I was gonna say, if they went lower, I'd be like, that's my luck, man. Because anytime I find out something, it's like the advantage is lower.
So there's good and bad with this. It went up, but it's much harder to qualify for. It's something I would encourage you and your development team to look at. It's not something our firm does, but we partner with another firm that does
Yeah, I'd
it.
appreciate if you could after this email, after this conversation, email this to me. I'd be very obliged.
Yeah, we'll do. Um, yeah, obviously the old school 1031 exchange, you pursue that and why or why not?
Sorry, say that again.
1031 exchanges?
Yeah. We use it extensively. We also have we also structure takes where other 1031s come into our deals.
Gotcha. So you pull in investor money by utilizing 1031 money.
Both, yeah, we pool investor money on, say, the buy side, and when we sell, and then we transfer our funds using 1031s.
Awesome. No, when I was doing some research, I have never done this for an for a real estate client, but have you looked at research and development tax credits?
No, I think we looked at it once. It doesn't really apply to us for a lot of the projects we're doing. So that's why we stopped chasing that RTM date. I think I looked at it like 1 year ago or 2 years ago or something like that.
Yeah, it hasn't changed substantially. At least the credit hasn't. There's some changes in that world, but the credit hasn't changed. It's really was you mentioned in one of your interviews or podcasts something about software development, your internal software development. That sounded to me.
Yeah, I mean,
It's a buzzword I listen for and think of R&D credits.
Yeah, I don't think it really. Yeah, we looked at it once and it didn't really. The juice wasn't worth the squeeze for us.
Yeah, that's typically the case, especially if you're subcontracting some of that software development costs. You looked at new market tax credits.
Yeah, that's something that we might consider in the future. I know a lot of developers build, get tax credits, and then kind of sell the property, or they'll put an affordable component, or some of them. We are just strictly market rate, right? So our product is down the fairway, nothing crazy, because we feel like, complexity is good, but complexity also means that on the back end, when you're trying to sell, your life becomes really hard. And we like to have deals where we have a lot of flexibility. Doesn't mean it's wrong. Look, lots of guys have made a lot of money. So obviously it's something that works. For us right now at our stage, we prefer to have cleaner deals where we can easily get in and out.
Gotcha. Well, I will say that I haven't done one of these new market tax credits. It's handled a lot by the bank and CPA firms that specialize in that area. But the banks really get involved in that because it has to do with some of your debt as well, and getting basically debt forgiveness on some of those investments. So in the form of tax credits.
Yeah. Well, heck, man, you said it to me after this in an email, man. I'm all ears, man. I don't want to spend more money.
Well, no doubt. It's something that's out there, and I know it exists, but I know what it is, and I can tell my clients about it, but that's the extent I've really worked with it. And then what about the last one is opportunity zones?
No, we just launched a development in an opportunity zone, but we didn't do an opportunity zone fund. So make of it what it's worth. Again, we looked at it. We just thought for acquisitions wise, a lot of the opportunity zones were really lower income, and that's a different business model than ours.
Yeah. Okay.
It wasn't a good fit. But look, again, it's a good business model, right? You have to be in that little sandbox, and you got to play in that sandbox. It's not our sandbox, but people seem to be doing well with it.
Yeah. Well, when I first heard about it, I thought it was going to just be the next massive thing. Everyone was going to be doing it. Well, it turns out, as you might expect, and I'm sure you know through your research, that these credits and similar to new market tax credits and opportunity zones, they have to exist in order to make this deal worth pursuing because the numbers don't always add up sometimes. And I think that's what we find with opportunity zones. These designated areas, the valuations don't support, the cash flows and things like that. So it's a challenging business model, and very few large, Bank of America, the big banks of the world. I thought they were all going to have several opportunity zones, but they really don't, because many times it's just a hard investment to make work, and you have to hold that for 10 years too.
Yeah, dude, the numbers don't work out. So yeah, I think it was designed in good faith, and sometimes things don't work out, right? I think the intention behind it was very positive.
Yep.
I feel, but you can. It's what is what they're saying, right? The road to hell is paved with good intentions, right?
Right.
So you can have good intentions, but execution also matters a lot. And again, for us, it didn't work out. But I know a lot of guys, or rather, I've heard of a lot of guys that did it. I mean, they seem to be intelligent people, so they must have thought about the pros and cons.
Right. Yeah, it's interesting. I'm basically helping 2 clients do those and pursue some, but one of them is like in an area that's just booming and bustling, and it's 3 years ago wasn't. So it's like, yeah, it's an opportunity zone, but the numbers are very different now.
Yeah.
And so it's it's a kind of a no-brainer. It's a good investment, so you might as well pursue that too.
Yeah. Again, I think it's very specific. Building an entire business around it might be very hard.
Right. Completely agree. 2 more questions. Looks like we got 5 or 7 minutes or so. Does your CPA get involved in your decision making?
Nope. Like, we don't let the tax tail wag the investment dog. Let's put it this way, man. I'm not a billionaire. I don't got those kind of problems. One day, hopefully, I'll get there. Right now, we just like to, again, like, our business model is we like to keep it simple. We like to have lots of flexibility in our business model because our personal theory, our backgrounds are such that we understand that things change on a dime. So you also have the ability to change on a dime, right?
Yep.
So we like to hold things long term, but we like to have the option that if, look, man, somebody comes up and offers us a price too good to be true, then as fiduciaries, we have the responsibility to our investors to transact. We can't just be like, well, this is my opinion. Well, opinions are meaningless, right? Because facts are facts and opinions are opinions. So we like to have that flexibility built in to ensure that, just things go sideways, things happen, people change, stuff happens. We just have that little thing built in.
Yeah. I mean, and keeping it simple, just looking for the good investments I think it's pretty wise. I see a lot of people get, very overly complicated with things that aren't necessary, for sure.
But hey, man, a lot of people have made money making things overly complicated, right? So there's got to be
that's
something.
the world I live in.
Yeah.
And then on the estate tax planning side, I know you're young, so it seems like
Oh, dude, we're already hitting
pointless
that mark. So
endeavor.
that's why this year we are doing that. I should have done this like 2 years ago. So yeah, this week, actually later on this week, I have a chat with a corporate custodian and a trustee to see how much they charge because we got to get all of that stuff going. Yeah, don't worry, man. I've been punting that for like a year plus that I need to do basically.
Well, I think as time evolves and business people that start companies, the last thing on their mind is, wealth preservation. But eventually, as you get older, you've established some sort of wealth. Preserving that wealth across generations becomes more important than even the annual tax planning. And so, I think you're probably starting to feel that as you're getting into
Yeah,
it. But
look,
now's
it's
a
just
good
one of those
time to
things
start.
yeah, it's just one of those things we have to do. And I realized myself I was being lazy. So doesn't mean I did it, but I realized that I should have done this earlier. So I need to be honest and upfront with myself, right? As opposed to saying, oh, I'll do it later. Right?
We're not gonna live forever, Omar.
Hey, not me, man. I don't want to live forever, man.
Me neither.
Are you kidding me? People are getting dumber every day. I shudder to think what's going to happen in 50 years when I'm older because I'm going to run out of patience.
Yes.
I'm going to be a cranky old person, and nobody likes those type of people, man. I like some cranky old person. You're like, dude, you and every other old person is cranky.
Right. But the older you get, the more you realize why.
Yeah, so there you go. So that's why I don't want to live forever. It's not me getting more intelligent. I feel the world is getting stupider.
Right. Yes, I completely agree. The more social media overtakes everyone's lives, it feels just more and more.
It's also a business opportunity, man, in a way. So, look on the bright side. You are always going to have a job. Hopefully, I don't screw this up and I have a job forever, right? But you for sure will always have a job.
For sure. Until they go something like flat tax or I don't know what could happen to make tax
Well, I
go
mean, even
away,
if they have
but
a flat tax, the issue is there's always loopholes and exemptions and this and that. Well, if you look sideways, you get 10%, but you look here, you get 12. So then
right,
everybody starts looking here.
right. So yeah, and I always say in good times or in bad times, nobody wants to pay taxes. So
Yeah, that's a
um,
bipartisan issue, Kyle.
yes, absolutely. Okay, well, I think we're fairly done on time. Had a couple other topics if I did want to fill some time. I think I've probably got enough. Um, my only question probably to close it off, really would be uh, most economists out there, I believe, think of the office market, the office space market as a bubble waiting to burst.
It has
Um,
burst. Let me just steal your thunder.
okay, it has.
Yeah, it has. Yeah.
Um, I the building that I'm in, our office building, was once for sale for the past year. It is no longer for sale. I don't know what the owner is currently planning on doing, but it is what it is. But um, how does that impact multifamily? Do you think there's
It does not.
opportunity there?
No, a lot of these guys are saying they can do office to multifamily conversions. These are typically people that are either not in real estate or they're not in multifamily, and they definitely don't have any development sort of experience. This
Right.
is not an easy thing. You're not going to make an entire business out of this. The reason is just think of this conceptually. You have an office building, right? And we're not talking a specific boutique office building. We're talking a vanilla, we're talking 8-story, 10-story office building in a suburban part of the country,
Right.
which is like most of the stock, right? Well, think about it this way. You've got this big floor plan, right? On one side, you have the elevator shafts, whatever. Maybe you have it in the middle, right? But now, as soon as you step out, I'm assuming it's vacated and it's just a little floor, right?
Mhm.
Like you have a wide expanse of space, right? So unless people are going to be, unless the code changes on egress, ingress, all of this stuff, and people want to get apartments with no windows, or people want to get a narrow apartment that's just really long, there is no way to, first of all, effectively do it for most suburban products. Then, for instance, even if you do it, you got to change the entire plumbing, you got to change the entire electrical, blah, blah, blah,
Right.
blah, blah. Right? So this stuff works if you're in, say, Wall Street or Fifth Avenue or Midtown New York, or
Right.
you're in the priciest parts of, say, California, right? Because the real estate is so expensive that, I mean, you'll figure it out. I mean, you'll figure it out, right?
Right.
But if
We
you're
got
in,
to
say,
use
Texas,
that.
yeah, you got to use it, man, right? But if you're in Texas, you're in Florida, again, exception being certain parts of Miami, maybe, right? Dude,
Mhm.
land is not the problem,
Right.
right? And it's not like suddenly, even in nice parts of Dallas, as an example, you can't just make a cookie cutter apartment and sell it for $8 million and sell like 100 of these.
Right.
This is in New York, man. Dallas people have a lot of money, but they're not stupid. They
Right.
realize they don't live in New York for a reason, right?
Right.
So it's not that easy as much as people say. A lot of it's hype. A lot of it's from people who either don't have office or multifamily experience, and they sure as hell don't have development experience.
Right.
Because this only works in very niche cases.
Yep. Yeah.
And again, the execution is very hard, even within those niche spaces.
Yeah. I don't know how you estimate the cost of that before you purchase a building. It seems
Well,
impossible.
very many intelligent people have tried, and well, a few have succeeded. But again, they're in these high cost prime real estate areas, right? Like New York or something like that,
Right.
where dude, the land is worth so much you have to do something.
Right. Yeah. And if it's empty, you might as well convert it to something else. I mean, and people in New York are notorious for living anywhere, so.
Yeah, but the thing also is it's a cost issue, right? I mean, New York,
Mhm.
anywhere in the world, you're in New York, Toronto, Tokyo, Paris, London. I mean, if you could afford it, you'd live in a bigger place, right?
Right.
My rent in Toronto when I used to live there was way more for my studio than I ever paid in the US.
Right.
Again, did I want to pay more? No, but that's my option, right? So people in New York, they don't like to pay more money, right? But
Right.
you're also living in a more desirable part of the country by some
Yeah.
estimations, right? So it's just demand and supply.
Right. Well, Omar, I very much appreciate your time. If you ever need anything from me, or if you'd like to shop
Sure.
anything or do anything like that, happy to help.